Yesterday evening we saw the Australian mining tax was passed, and this did have a temporary negative impact on the Australian dollar. However, this influence was lost overnight as we saw a general risk-on tone hit the markets. Now, kicking off in the US, we did see some positive news from Apple on its share buyback scheme, and that helped underpin a rally in equities. We also saw banking stocks improve, which underpinned the risk-on theme, which supported the New Zealand dollar and the Australian dollar against the US dollar. There wasn't really much movement in the New Zealand dollar against the major crosses overnight, and over the rest of the week it is likely to remain fairly quiet given the lack of economic drivers. However, we are going to see some mixed forces on the US dollar and in turn the New Zealand dollar over the coming week. We've got a couple of Fed speakers out. Now, these speakers are at the dovish end of the spectrum, which typically means that they're a little bit less concerned about future inflation pressures, and there is a risk that they highlight the long-term challenges that still face the US economy, and this in turn could weigh on the US dollar and in turn support the New Zealand dollar higher. But we do expect this US dollar weakness will be capped by some potentially stronger US housing data which should come out tonight. This should remind market participants of the strong economic backdrop that the US economy has seen over the past 6 months. Yesterday we had some data out that confirmed New Zealand consumer confidence remains very subdued. We had the Westpac McDermott Miller Consumer Confidence Survey for the March quarter, and it showed that consumer confidence was largely unchanged compared to the previous quarter. Now, we have been expecting to see some steady improvement in consumer confidence over the coming year, largely reflecting the ongoing improvement in labour incomes. However, it does appear that we are off to a poor start to the year, with consumer confidence remaining at very low levels. Now, if we think about over the past few months, we have seen a steady climb in petrol prices back to very high levels, and this is likely to be eroding consumer confidence. As a result, the higher cost of filling up your petrol tank is likely to see reduced spending elsewhere as it's cutting into household disposable incomes. Now, as a result, over the first half of this year, we can expect that consumer spending will remain quite sluggish. And overall, it really does highlight that there is little need for the Reserve Bank in New Zealand to hike rates before December 2012.